Hello, welcome to Financial Markets Weekly, an audio podcast by Succinct Information. This is a professional summary, free of noise, focused on facts, and straight to the point. We help you save time while covering the key events and market performance. These are the highlights from last week.
Global risk assets resumed their upward trend after the lackluster Easter week. Every equity index in developed markets ended higher, with some European indicators, such as France's CAC 40 and the Euro Stoxx 50 index, reaching record highs. The S&P 500 index added 0.8% last week to 4,138 points, bringing the year-to-date return to almost 8%, compared to a 16% gain by the Nasdaq Composite. In Europe, this year's best-performing stock markets are Italy, France, Spain and Germany, in that order, with gains between 13 and 18%, measured in euros, which appreciated 3% versus the dollar in the same period. The earnings season for the first quarter of the year kicked off on Friday, with JP Morgan, Wells Fargo and Citigroup reporting and beating consensus estimates. Large banks are benefiting from deposit inflows coming from medium and small entities, after the collapse of banks Silicon Valley and Signature. JP Morgan reported a quarterly profit of more than $12 billion, and shares rallied 9%. In Europe, the notable mover was French luxury giant LVMH, which saw revenues grow 17% year-on-year, to €21 billion, and shares ended 8% higher at a record level. LVMH is now valued at €450 billion, and is among the world's 10 largest companies. Another driver of performance was the release of US inflation data for March. Headline CPI fell from 6% year-on-year in February to 5%, while the core CPI figure increased modestly to 5.6%. The update did not materially change the market's expectation for another interest rate hike of 25 basis points by the Fed in early May. The current Fed funds target rate is 4.78%. In Europe, the final reading for headline inflation in March was released, and price pressures are cooling down. Germany's inflation dropped to 7.8%, France's is at 6.7%, and Spain's at just 3.1%. All readings came in below those of February. In monetary policy updates last week, the Bank of Canada kept interest rates unchanged at 4.5%, but left a hawkish sentiment, as it anticipated the need for higher rates to bring inflation down to target. Canada's inflation is running at 5.2%. Korea also left rates unchanged at 3.5%. The US is once again stuck in a political stalemate regarding its debt ceiling. The cost of insuring against a default of US Treasury bonds, as measured by the value of credit default swaps, rose to an all-time high. The one-year CDS fee stands at 95 basis points, while the 5-year contract is at 46 basis points. Highlights on currency markets include the euro reaching a one-year high against the dollar, as it closes at 1.10. The British pound ended at 1.24 against the dollar, the strongest level in 9 months. Let's finish by mentioning the strong rally in digital assets. Bitcoin is trading at $30,350, 8% higher than 7 days ago, helping the whole crypto sector reach a total market value of almost $1.3 trillion. Ethereum is 15% higher at 2,120, after the successful implementation of its Shanghai hard fork on Wednesday, a software upgrade related to its staking capabilities. Next week, the following blue-chip companies will report earnings: Tesla, Netflix, Goldman Sachs, Bank of America, Morgan Stanley and AT&T. Thanks for staying until the end of this episode. Please follow us and help us promote our channel. Visit succinct.info to learn more about our service. See you next Sunday. Have a great week.